29th of May 2023, Monday, MAO with Cal once again. Now, this is a very important video. You really need to watch if you're a NASDAQ fans, because I think we should start to book some profit on the NASDAQ. Now, of course, the NASDAQ have been going up quite a fair bit. Last year, it was down by 37%. This year, it rebounded more than 25% at this moment right now. Overall itself is still down, but I feel that this is a good time to book your profit, because I believe that there could be some profit taking coming up. All right, with more details, let's look into this video. Now, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. Now, first of all, thank you very much, guys. We hit our 1,000 subscriber, and we are going through this very nice restaurant near Jalan Besar, and we are going on the 8th of June on Thursday at 7 p.m. All right, and we invited 10 packs of people to join, and we did a live, draw yesterday. Let me just bring it to you. Let me give you a moment. Where did my file go this time around? Okay, here we go. All right, basically what I need you guys to do is to basically put in the congratulation note, and of course put the word 1,000. And of course, you notice this, I actually, every single one I reply. Yeah, this is really a lot of commitment that I give for you. And of course, if you're the winner, you're contacted and a phone number is there. You just have to contact us. Okay. All right, this restaurant itself, as I say, it's pretty nice. It's a halal team restaurant with serving Japanese food, French food, Western food. Very nice. I tried it. So you guys, you want to do, let me know. Yep. Okay. All I think is this right now over here. We have contacted you. Please contact Susan ASAP. All right. Now our TWB TCS, the TWB crazy system tryout period is over. Yeah, it's over. So when's the next tryout? Well, probably will be in July or maybe August, depending on how it goes. But the thing is this, my class is still going to continue. It's going to happen on the 3rd to the 5th of June for my 21st intake. So if you think that you want to just come on board because you're so impressed with the calls and the trading and the system, PM us through Facebook. We'll come back to you ASAP. All right. So I want to show to you, right, what is so amazing about our thing itself, right, through our chart. Let's take a look here itself. This is Hang Seng today. Now, the thing is this. Now, look at it, market. The market over here for the Hang Seng rebounded almost 500 points, right? So in a single day, the Hang Seng go by 500 points. Normally, any indicator, whether it's RSI, MACD, stochastic, will definitely point upwards, right? But you notice that my indicator itself show a different story. My indicator tells me that the boys are still selling, even though it's lesser, but the boys are still selling. And then what happened itself, when the market U-turn, as you can see there, all right, we know that the boys will accelerate their selling, and you can see the momentum is thriving. So that's why the Hang Seng actually collapsed. In fact, itself, right, it's even trading lower now as we are speaking. So what does it tell you? As long as you know your system well, you know the market well, even though you may have a recovery like this, we know that it's a fake. And when it's a fake itself, look at it, the market really collapsed down. So if you think that this system is something that you want to have it, contact us through Facebook. We're more than happy to assist you. All right, let's discuss what happened last week, shall we? Now, last week, we have a very strong rally, 300 points on the Dow, the NASDAQ by 360 points, S&P by 54. So, of course, we already been telling you this. Jim Cramer is going to be wrong. He said that there'll be no default, but obviously, we saw what happened on Saturday. They came out, good news, and of course, today, this market gave out further. But of course, as I said once again, on Thursday, I will tell you that the market seemingly is having some news and there's some pre-buying before the weekend. And of course, when Friday, the market shoot higher, we all can confirm that, right? Internally, the leakage is out already. So for those who have been buying in the market on Friday together with us, congratulations to you, well done. There's one particular counter that I want to share with you today is Amazon. Now, Amazon up by 4.44%, with $120. Now, of course, Amazon is one of the leading indicators, leading FANG stock. And of course, a lot of people like to buy it. But to me, it's all right. I like to give you my personal opinion. I think for this counter itself, right, I think this counter may be coming off soon. And I'll explain to you why do I think that, okay, very, very soon. So the thing is this, US stocks jump on Friday because they were expecting a deal to be reached by then, and which actually happened. So you can see that there's a lot of Kelong, or we consider as what you call pre-leakage, okay, before the market actually started. So the thing is this right now, we had known that the NASDAQ had notched a 5th straight week of wins. And that's the reason why I feel that in terms of technical, it's kind of overbought at the moment. But in terms of fundamental, I believe that historical pattern shows that the NASDAQ may be in for some profit taking soon. So we all know that Kevin McCarthy came in and he actually says that deals is going to happen soon, and they managed to do some bipartisan deal between them. All right. So end of the day is this: despite the Federal Reserve now is trying their best to continue their combat on inflation, but of course now with the debt ceiling problem release and also got ease off, so now they can really concentrate. And of course, one thing they are looking at to basically is to kill off the economy so that inflation can come down. So let's see what can be done. But nonetheless, let's look at Amazon first. Now Amazon has traded all the way. Now recently Amazon came down all the way to about $81 back here, and then that was whereby I also believe I told you guys to buy back some Amazon, and I gave you my target of 114. Now, the thing is this, the market really rebounded to 114, but missed my target 114.93, and it pulled back. Then, of course, I didn't follow up. Today, we just saw it. It went past 114, and now it's 120. So by right, the next number it could be going is about 130, and I think that at 130 would be a very good price to let go this counter. Now, why is that so? Because I'm not comfortable with Amazon share movement right now. But more important is this: I noticed that the president and the CEO, the senior vice president and CFO, they have basically exited some shares, and the share they exited was between 115 to 116. So if this share hit 120 to 130, I think it's a very good time because you're selling better than the boys. Now, are they selling because they need the money? Well, doesn't look much because it's like 2.5 million to 1.9 million, but I don't think this is the only stash they have. And interestingly, Jeff Bezos, the original key person of this Amazon, bought one share. So I'm not too sure what is this point here. But nonetheless, the remaining people are selling. So I think that Amazon could be coming down pretty soon. So if I look at it, I think Amazon will come down soon. So 130 will be the best level for resistance. Coming back to 102 will be my personal opinion. So let me know in the comment box what do you think about this particular call on Amazon. Now let's look at the US debt right now. The US debt has been increasing, and of course the debt limit has also been increasing. So to me, it's all nothing have changed. So both Biden and McCarthy reached final deal to prevent a default, and now must sell this idea to Congress. Now this is very, very important, because the thing is this: the Republicans and the Democratic votes must be passed this Wednesday. And of course, if anything happened, this could create a big mayhem to the stock market. Now, the agreement prevents the worst possible crisis, a default for the first time. All right, said Biden. But the thing is this: likelihood to be a bipartisan agreement, which in both sides have to give and take. Now, the thing is this right now, we all know that if there's going to be any form of a default, then what will happen is that there'll be an international financial crisis. Analysts say millions of jobs will be vanished, borrowing and employment rates will jump, and the stock market will plunge easily by some of 10 to 20 to some even 40%. So of course, this will make a big dent on the US Treasury Department debt side, which is about 24 trillion right now. So the thing is this: McCarthy says this, that the agreement doesn't get everything everybody wanted. All right, so that means that both sides must give way. Hence, therefore, this will not go well with Republicans because they really want the spending to reduce. All right, while the Democrats want the spending to increase. So I'm just wondering how can they do that? So the thing is right now, the support from both parties will be needed to win the congressional approval, yeah? Because if let's say things doesn't go well between their own community, then things can get very, very dicey. So now we all know that they're going to push the debt by the debt ceiling by 2 more years. And of course, this is actually just kicking the can down the alley, yeah? So with the current debt right now is at $31 trillion. Seriously, this number will likely go to 33 trillion. And of course, the higher it goes, the more cost it is. Hence, therefore, it will just literally bankrupt the entire America. So let's hear what the experts have to say regarding to what they heard about this deal. Let's bring it away from the expert in Bloomberg. Yeah, let's go. Hold on a minute. Okay. All right, here we go.
than might have been feared at the start of the year. The flip side, though, is that you've still got the Fed sounding hawkish. We saw some inflation numbers on Friday, which are a little bit on the upside compared to expectations. The US economy is still likely to slow. That risk of recession is still there. If you look at commodity prices, say, take copper, often referred to as Dr. Copper, it struggled to maintain any positive momentum. In fact, the momentum recently has been quite negative, and there's the uncertainty about the strength of the Chinese economy. So I think once this is out of the way, then you're still going to have a fairly rough ride in shares, and we're coming into a seasonally difficult period as we go into the June and then September quarter period, which is often rough for shares. So yes, I think you get a knee-jerk reaction there. The other thing to note is that the deal does cap spending in the US. So you're going to get less government spending than previously expected, and you've got that liquidity withdrawal as the Fed starts rebuilding its deposit at the Fed. The Treasury starts rebuilding its deposit at the Fed.
Okay, so pretty clear that we can hear that we are now going to focus on the Fed. And the Fed clearly wants to bring down inflation. So this is just a temporary reprieve. And I've been saying this since the last two MAOs. I said that this is just because we're going to have the knee-jerk celebration. But then again, after that, there will be back to the focus on the current economy right now and the inflation issue. So that's why you can see the Dow Jones futures jump up this morning. Now basically have gained back most of the gains. Yeah. All right. The thing is right now, the very important thing is the conference board coincident this economic indicator, all right, the LEI. And this is something that you must watch very closely because now we have a very big divergence. Yeah. You can see that now the advanced 12 months is actually trading down lower, while the 10-year Treasury yields minus Fed fund rate is now basically in the negative zone, as we all know. So based on historical, excuse me, based on historical pattern, we usually see something that repeats on a regular basis since 1971. As long as the 10-year yield basically goes in the negative zone and followed by the coincidence economic indicator, that usually means that there will be a recession. So like it or not itself, this is really happening. And I've been very clear and determined to say that there will be recession by August to September period. All right, I've been saying this for the longest of time. And in fact itself, if this really happened, then of course the stock market will start to take profit. And that's the reason why I feel that it's time to take some profit off the table on the NASDAQ. All right. So the thing is this, you can see on the screen right now. Okay, you can see that we are making it bigger for you. You can see that it's very clear that we're just months away from the potential recession. So if this is going to be forwarded, that means that in about 3 months' time, that will be August period when we see the US recession. Now, one thing is that the fear and greed index now is trading at the price of 67, and this is a greed level. Now, despite what have been happening, all the fear, but it seems that it shows that people are still pretty complacent. They feel that things is okay. And of course, you look at the index right now, we are actually away from the moving average. That's why I believe that the S&P may drop back to 4,000 again in the near term. And of course, in terms of stock price strength, it's actually below the 0%. And of course, for the stock price breadth, it's lowering at the same time. And very incredibly, the put and call options show there's extreme greed in the market right now, which means that everybody is putting things away. They don't care about inflation. They don't care about the interest rate. They don't care about the debt ceiling. They just want to buy. And if you actually look at it itself, it's only the 5 companies, the FANGs are moving up. The remaining 490 stocks are not following through. Hence, therefore, this makes me even more certain that a pullback is just a matter of time. Now, the thing is this is the NASDAQ index since 1999 to all the way there. Now, we all know that during the 99, the big movement where the NASDAQ basically shot up from basically 1,000 going up to almost like 5,500. That's like 400% in just a span of 3 to 4 years. The thing is this, you look at the way it's moving right now and versus today's market, kind of feel that it's a deja vu. And of course, talking about deja vu, we know that there's someone here called Stanley Druckenmiller. He actually said this, writing big teams is an art, and most tend to get involved in the late stage. Recall the quote from one of the world's best trader, Druckenmiller, and his last .com era trade. Now, back then, Druckenmiller was not really buying into NASDAQ counters because he feels that it's overbought. But because everybody was buying and making tons of money, he couldn't take it anymore. He bought $6 billion worth of the stock market, of the tech stocks, and within 6 weeks, he lost half of it. This is really incredible. So that's why he said that maybe he had learned not to do it again, but he knew that, right? So that's why I feel that we are going through the same thing again. And FYI, back then the NASDAQ was at 4,000 to 5,000. Today we have 14,000. We are like basically 3 times. So for a guy who's worth $6.4 billion, I think you really need to think about it for a while, yeah? Because now the tech is valued at 37% premium to the market. Oh my goodness. So this is the few moments where the tech are more expensive than the S&P, right, since 1999 to now. So if you look at it, every time when this happens, we will see some form of recession coming in. So that's the reason why I feel that this is really overdone. We need to be very careful. And we combine this with the NASDAQ versus a 10-year yield. You can see that whenever you have the NASDAQ coming down and the yield is going up, the market itself, right, usually will pull. So the yield goes up and the NASDAQ will come off. So it happened again, right? When the yield went up, the NASDAQ came off. So now the thing is this, on this side itself, the yield is climbing up, right? So what do you think the NASDAQ will happen? So without a doubt, we do expect the NASDAQ to fall. So that's the reason why I feel that for fundamental and technical, we need to take a look. And of course, now this is something very interesting from the internet. This is where the number of times when S&P equal weighted, right, decline was the tech sector surged by 4% in a day. And the last 2 times was in 2000 and 2001 and now. So if that's the case itself, if there's going to be a forward, what they call historical pattern for you to take a look, then maybe it's time to be careful on the NASDAQ counters. Yeah, I just believe that it's a matter of time there will be some profit taking. So in terms of the NASDAQ technical chart, we use the lowest point back then here in this last year, October period, and the highest point, all right, back all the way to the 21 period. So of course, you can see very, very clearly that the market now went past the Fibonacci 0.236, went up, stopped there, nicely at 38.2, couldn't go any higher, pulled back down again, got the blessing of the moving average, and plus, okay, the market stabilized at 23.6. Then after that, everything goes like a dragon. It went to this 38.2. It even went to this level here, which is the 50%. The market is now very near to the 61.8. And I think that this is one level to watch out for. Okay, so the number is for 14300, while the current price right now, we are at 14298. So we're actually very, very near to the technical point. So if the market really had to come off, then that means that someone else is basically wanting to get a hold of it. So if you ask me, I think that this should be the end. We should see a pullback very soon to the 50% zone at 13600. Okay, only when that happens itself, we will look to adjust. See if the market continue to go down, then sorry, it may be going down all the way to the 0.236 level. So tomorrow, at this number here itself, 13,600 is a very crucial figure for all the traders on the NASDAQ, yeah? All right, that will be all for today. I hope you enjoyed this video. I'll see you guys tomorrow. This is Cal signing off. Bye-bye.